Welcome, welcome, welcome back. For this next portion of the event, I'm actually excited about this one because we're about to have a panel with fellow PCs, fellow investors that will be sharing their learnings and giving us advice. And as a new angel, I always look for opportunities like this to learn. The moderator for this section is Jorge Garcia, who is one of our Angels members and the CEO and founder of Hello Iconic. Please help welcome him.
Well, hello everyone, both here and in the cloud, in the skies. Yeah. So I'm Jorge Garcia. I'll be moderating this panel. So we actually have a really interesting panel today because we're going to be talking about investing in early stage startup, early stage ventures. And we have an interesting background from the financing side of things, on the corporate investment and corporate innovation side of things, and then connecting companies, early stage companies with corporations as well. So I think it's going to be a really interesting conversation. So we're joined by, and I'm going to let everybody introduce themselves. So we're joined with, starting with Vanessa Yvette Rosado, Head of Brand Strategy at Venture Fuel. So welcome, Vanessa. Maybe you can tell us a little bit about yourself and how you are related to this investing in early stage ventures, and also how Venture Fuel helps startups.
Awesome. Thank you so much. Thank you for having us today. So I work at Venture Fuel. Venture Fuel, Fred actually was moderating the last panel. He's our founder and CEO. We work with industry-leading organizations that want to partner with startups in order to accelerate their innovation program, whether it's to drive greater efficiencies somewhere across their supply chain, to close a strategic capability gap that they have, or to identify and explore emerging business models in their sector. We say disrupt or be disrupted shouldn't be the only choice. We believe that collaboration, and I think you've heard a lot of that today, and then certainly on the last panel, and partnership is a better way that we can all reshape and lead industry into the future together. So very excited to be here.
Awesome, thank you. We're also joined by Mike Bergenes, Director of Strategic Finance Outsourcing at Armanino. So Mike, welcome. Can you tell us a little bit about yourself and also how you are related to the space and Armanino can help companies? Yeah.
Sure, Jorge, thank you. Good afternoon, everybody. Mike Bergenes. I work for Armanino, which is a tax audit and consulting firm that's based here in the Bay Area, but are approaching nationwide status as we grow. I wanted to really stress to people that while tax and audit and consulting doesn't sound all that sexy and all that fun, and how does that relate to startups, we are really focused on the growth, emerging growth, and the middle market. And our particular company, we talk about things like being entrepreneurial and being innovative, which is not really what you hear from most tax consulting and audit firms. My group is part of the consulting group, but we are really doers. We're not consultants. And people hire us to help them to manage the back office, whether it's finance, HR, or accounting, so that they can focus on what they do best, a topic that came up during the talk that we had earlier.
Awesome. And I know you also experience on the part of when they're raising capital, how the numbers should look like and all that, right? So
that's right. So I have been an entrepreneur. I've been a CFO where I have helped my companies raise money. And we focus in our group in helping people to identify a strategy and support them while they're raising money. That's a key thing that we do for our growth companies.
Perfect. Well, David Min, so welcome. David Min is VP of Corporate Innovation at Walt Disney Company. David.
Yes, thanks. Thanks for having me. Hello, everyone. So I'm Vice President of Corporate Innovation at the Walt Disney Company. What that means is I build relationships between startups and the various business units of Disney, which could mean investing in the companies. It could be just helping with commercial deals or just helping them navigate the company. I'm part of corporate, so we're kind of over all of the company. So I work everything, with divisions that are Star India in India to, ESPN, ABC, the Studios Group, Parks and Resorts, etc. And I've been in the venture business now for about 20 years. I was with Steamboat Ventures, the venture capital arm of Disney, until 2011 when I came back to corporate to do kind of the corporate thing for Disney.
Nice. So we're going to have both the startups working with Disney and at the same time investment on the Disney side of things, right? Awesome. And Jorge Garcia, I'm one of the founders and CTO of Hello Iconic. We basically are an agency focused on the fintech and crypto space. We help companies launch neobanks, mobile wallets, buy now, pay later solutions, lending platforms, and such. We work a lot with early stage startups, all the way to Series A, Series B, and then medium-sized companies as well, some of large corporations as well. But so let's get started. So we are talking about early stage ventures, and I always find this funny because it sounds like one thing, but it's actually many things. And there is like a pre-seed, there is the seed, there is the Series A. So yeah, I would like us to start, and maybe Mike, you can help us a little bit navigate what are those different stages on an early stage venture.
Sure. I think that the way I think about it is, I'm sure that more stages will be created. When I started, there wasn't pre-seed and seed. I think the way to think about it is there are points at which a company takes in money, gives up ownership at evaluation, and then they are asked, or they should be thinking about, what am I going to do with this money to be able to add value, add to the valuation of my company, so that if I need more money, I can go out and raise it and get the excitement of my existing investors or some future investors or other investors. So if I had to put a name on something, pre-seed might be proof of concept, seed might be making sure that if I'm in a technology company, I'm developing the technology and it works. Or it might be, if it's a service company, product market fit. There are certain phases that you should think about rather than the stages, and work with your investors to say, hey, this is what I need to achieve. This is how I'm going to use the funds. And this is why you're going to be happy at the end, because I will have either taken risk off the table, or I will have proven the concept and grown the business and shown the potential of the business. That's how I think about it.
Awesome. Anybody else wants to add something on that side? Awesome. So
I would just say I miss the good old days when it was like friends and family, maybe some angel, and then Series A and B. That was it.
Exactly. Not only are there more phases, the fundraising world is more segmented.
Right.
And Angeles is a good example of that. And so fundraisers people who are raising money have to think in broader terms about who they should be talking to, right? Earlier people came up and entrepreneurs were saying, please let me know if you're interested, and I don't want to spend all my time talking to people, because people are becoming specialized. So, hey, if you're not interested, that's fine. I'll move on to the next.
And also thinking about what they want to get at each phase, or what they need to prove or deliver at each phase. And often when we're talking with founders, it's not just, and I think this is a topic that's covered a lot in the industry, it's not just about the funding at each phase. It's also about the expertise or the knowledge or the access. I mean, we're always looking, we spend a lot of time around the Series A space with companies, but we spend a lot of time talking to them, if you're trying to scale, then what do you need? Do you need a partner who can bring you access to distribution? Do you need a partner who can bring you access to resources, materials, infrastructure? And it's not just about the raise, although it's certainly an important component. If you're working with a corporate partner, it's also about the value add of the commercial deal.
Yeah. And we were talking with somebody in the audience, and he was asking, like, is it still possible to raise capital with a napkin as the history of Silicon Valley goes? And I don't know, like, is it really possible now, or everybody's waiting for a proof of concept or some sort of object already? Yeah. So
Yeah, if you have the reputation and it's early enough, you might be able to use a
Yeah.
napkin, back of a napkin. But yeah, what you show an investor is important, and everything at each phase that we were talking about, what you're showing them should be different.
Yeah. Great. And well, thinking a little bit more and moving forward, now that we've defined kind of like different of those stages, what are you seeing right now in the environment? Like, what are the current, like, have you seen any current trends right now in the environment on different type of companies? Of course, we're hearing about crypto, although for us that are in crypto or in Web3 right now and NFTs, we know there's a lot happening right now, but it's like, what are the trends that you're seeing right now? And maybe David would love to see, like, what have you seen right now?
So we're very focused on Web3. I think Web3 is here to stay. The one challenging part is there's been so much capital going into Web3 even over this last quarter. Before I was coming up here, there was just another report from CB Insights about like 9 billion or something just coming in the last quarter. It's a huge amount of capital just going in, which means that a lot of those investors are, valuation insensitive, right? They just want to get in the deal and, try to get the money working as soon as possible, right? So for us, I mean, even though we're a corporate, we still like to, get the amount of equity that we think is fair for the amount of money that we put in.
Yeah.
So, but that's definitely a trend. And for us at Disney, we have launched NFTs. So we are looking at that, we are actively in that space.
Yeah, I think with Viv, right?
Yes, with Vivi, yeah.
No, it's great. Vanessa, you see many companies, so what are you seeing right now?
Well, we spent a lot of time actually at the end of last year just looking across the landscape and trying to understand which industries we think we talk about at the highest risk for disruption or have the greatest opportunity for collaboration with startups. And so we've spent, and I feel ironic because the last panel actually represented a lot of the sectors that we look at, but we spent the beginning of this year, talking to a lot of fintech investors, chief information officers at banks, startups, also looking at the healthcare sector and the impact of big tech on health tech. But also, when we think about all of the enablers of Web3, whether it's all of this amassing of data or the computing power that's giving people the ability to generate insights off of it and actions off of it, what is the impact of that across other sectors? So, for example, healthcare, we look and we say, okay, it's click and mortar now. There are hybrid models of care. So anyway, I could ramble on about this forever, but those are kind of some of the big ones that we're looking at right now, above and beyond Web3 and Metaverse. It's more like the variables that are enabling Web3 and Metaverse. What else? How are they going to affect the rest of business and society? And so how can we help our corporate partners prepare for that?
I would say, as I mentioned, we're very entrepreneurial, innovative, and what we do is we try to be on the leading edge to help as the money is flowing in and offer entrepreneurs unique opportunities for support. So the best way for me to answer that is to let you know that we have an entire vertical dedicated to blockchain. And we are seeing a lot of fintech work. And if you think about it, to a certain degree, blockchain can be seen as fintech in disguise. For those of you who know blockchain, there's certainly huge opportunities there. We are very active in technology, of course, and specifically in the SaaS sector, one that's had enormous success and as a business model is seeing a number of industries finding applications there. InfoSec is also, and has been for a while, a very popular one. But I think the environment is changing right now as far as what's popular and what money is going to be looking like, and what not only entrepreneurs but angels should be thinking about.
Yeah, and we're gonna have some time to talk about that, about the environment, because I know everybody's kind of like curious, and anxious on what's currently happening, both at the specific sector, but actually at the macro level in the country as well. A couple of things that we've seen, for example, on the fintech space, definitely there is that trend of the niche neobanks for specific sectors, but then in each of them, we see an expansion of, okay, let's add things like, I don't know, brokerage accounts, let's add crypto investment and such. So we see an expansion of services in those fields of neobanks. That's something really interesting. And one of the areas that I'm actually really curious and interested right now is what's called embedded finance, where we are seeing businesses that are not a financial company and they're not a fintech per se, but they are adding other services for their employees or for their clients, where they do add some lending sort of capacity. They add, I don't know, advance payment for their team members and things like that. So those are some of the things that we're seeing also in those space specifically where we move. Yeah. So, but yeah, like a lot to talk right now about that. Maybe I would like us to move a little bit about the large companies working with startup, which I think we have a lot of experience here. And I remember when we were discussing on our call, so Vanessa, you mentioned a little bit about being enterprise ready. Yeah. So how is this a startup? And I hear it a lot. It's like, okay, if we only close, I don't know, CVS, if we only close Disney, for example, and I'm like, okay, that's a hard endeavor. And there are, like, some people say, okay, never work with large companies, just focus on small, medium size business, focus on the direct to consumer. But in reality, there are startups that make a mark and are able to work with large companies. So I would love to know about that enterprise ready concept that you were mentioning.
Yeah, so when I think that it is also, it's a strategic choice by a founder of how you want to grow and if you do want to collaborate with large organizations, because it does. And I thought the previous panel was very interesting. They talked about, actually a lot of them, all three or two of the three, talked about pivoting from being direct to consumer to actually going through enterprise to provide the service that they wanted to, that their startup was providing. We look at companies, first of all, our client is the industry leader. It is the enterprise. So we go out and we scan the landscape and we say, okay, which startups are playing in the space of the very specific problem that our corporate client wants to solve? Because they're generally looking, and like I said, to either drive efficiencies somewhere across their supply chain, or to close a strategic capability gap, or to identify a new business model in their industry. And we'll find those startups, and then we definitely look at the founders and the founding team, and we want to see what their track record is. We look at what type of investment that they have. We talk to their investors. I mean, we do very thorough due diligence and vetting, and then we actually meet with them and we talk to them about the corporate opportunity, what the corporate need is, and we gauge if they're interested in actually collaborating to meet the need of the corporate client. I mean, so when we talk about enterprise readies, it's a series of variables. It's not just saying, you know, what series of funding do they have? It's about their appetite for collaboration and integration into a corporate ecosystem.
Awesome. Dave, would love to hear your thoughts about that, because you probably are connecting those inside Disney, right? So
yeah, absolutely. And Vanessa's exactly right. It's about the management team. It's about doing the diligence on the company, just like you would in any other investment. But I think what's most important, especially when it's early stage, is that it's the timing of whether that company, that startup, can actually take on the volume of activity that has to be delivered to that corporate, right? You know, when we're a big company, we're the big person in the room. We want everything, you know, that company's serving us. And if you're not at the point where you can actually manage that, in other words, you don't have the team size or a dedicated person to do that, or in, you know, one case when we did work with an early stage company, we launched, and it was with something that was also tied to airing on television, and literally they didn't have the server capacity to keep up, right? And so literally crashed immediately within the first 15 minutes, and it took till the next day to get things up and running again, right? So it's understanding that when you work with somebody, that a big corporate, that you have to have those kind of means at hand. And that's what we do, is we typically try to vet that now, right?
One conversation last year, so on a monthly basis, we try to get investors, executives, and entrepreneurs together to have conversations about these types of collaborations. And last year, we brought a materials innovation company together that was working with Ralph Lauren. And they said the most important thing, because when they came in, they're doing plant-based alternatives and removing plastics from fabrics. When they came into Ralph Lauren, they said, we can't satisfy the order of the volume that you're asking us for. And they had someone on the materials innovation and supply chain team who was able to say, look, we will partner with you. We will be patient. Like, we will find one project where we can utilize your material. We can spotlight it for the organization. We can put it in front of consumers, engage their interest. And they developed an entire relationship, long-term relationship, that involved an investment from Ralph Lauren in the startup, that involved a member of their materials innovation team sitting on their board, and they are scaling together. And now that startup has, by the way, also clients across all different apparel and like different industries, actually automotive also are using their materials. But it was about this understanding that they couldn't just, the startup couldn't just flip the switch one day and deliver, 10 million, I'm not going to get it right because I'm not in apparel, but bolts of fabric or whatever. But it was part of Ralph Lauren's long-term mission to utilize more sustainable materials. So I think, David, I love that comment. I love that story about the server capacity, because it just demonstrates that you also need understanding on the corporate side, not just on the startup side, about this is a long-term play that we're in together to win and kind of change business together.
That's right. And I think if you're a startup going to a corporate, if you can find somebody that can champion you, but also then be able to manage the corporate side, right? Such that, and I do that all the time of, they'll say, oh, we want to launch and this is what we want to do. I have to talk to my guys internally and say, well, let's roll it out a little bit slower. Let's do a proof of concept first, and then we can move to that, right? To manage those expectations internally. Sorry, Mark, I cut you off there. Go.
Just a few thoughts on this topic, which is an important one from the funding standpoint. Absolutely agree that anyone you raise money with is a strategic decision. That being said, I think the changes that we're seeing in the market right now, with potential valuations being offered dropping and the stock market dropping, corporate balance sheets have never been richer, and I would see the activity at the very least, although I don't think the market is going away by any means, seeing VC and other angel investing probably slowing down a little bit, but corporate investment increasing compared to where it was, as maybe valuations, and David could speak to that better. The other thing is about the scaling. What's really important, a story that I can give you, a story where we were helping a client. They were acquired by Tencent, the Chinese company, small company down in Los Angeles. All of a sudden they have reporting that they have to do. This is just in the finance side, forget about servers and others things, just the reporting that they have to do. They hired us to help them so that they could keep that flowing, looking professional, making sure they were on top of things. So if you have a situation like that and you feel a burst of need, whether it's on the back office or elsewhere, get help. Get help. It's out there.
If I am a founder, where do I knock in a company? Like, how do I get in? Like, is it definitely procurement is the last place to start? Like, what's the best way to get started at work in a company with a large corporation?
Yeah. So, I mean, it really depends on what you do. And if you're, enterprise tech, I mean, basically my group looks for things to help us launch new media and entertainment experiences. So it's really kind of direct to consumer or enabling technologies to do that. So, we have programs. We have a Disney Accelerator program and all my team that I manage kind of reaches out to companies as well in certain areas that we're looking for. So that's kind of an entry point for us. Other times it's, people come in through the business units directly themselves as well.
Yeah, and I would say that we work with two sort of models within corporates, and it depends on the organization and their level of sophistication in this space. But we are either working with an accelerator team, or they have lots of great names. They're a garage or a lab or something very interesting and different. But the innovation is in their DNA. Collaboration with startups is part of their KPIs. They are the people in the organization who are hiring folks like us to then help them navigate the space, because it is such a crowded space and there is so much variability in terms of the quality and the potential for partnership. Then we have other organizations we work with where it's happening at the C-suite level. They don't have an innovation practice. They don't have a startup practice, but they understand that they are in legacy industries and that if they do not innovate, they will be completely displaced. And so that's where we come in, and we run accelerators. We run what we call pilot excellence programs for companies like, well, I don't want to, I'm not suggesting that these companies follow that second model, but we run them for lots of different companies. So we run them for companies like AARP Foundation, Dick's Sporting Goods, where we're going out into the ecosystem and we're saying to startup founders in a specific problem area, look, we're looking for you. Come talk to us. And we have a global innovation network of investors, entrepreneurs, and other corporate executives. So we actually go out and knock on their door and try to find them.
Perfect. Yeah, and Mike, you did touch the other part of the corporate investment side of things, and how, while maybe the VC side of things may slow down, cool down a little bit, that area could actually grow. Could you expand a little bit further? Because it's interesting. I mean, I know many companies want to raise capital right now, like innovation never stops. Why do you think that part is going to grow? Yeah.
Well, I'll start and I'll hand it over to David, who can speak for the corporate side. It's just we were talking earlier about how I was in the Valley in the tech bust of 2000. And when that happened, and for those of you who were here at that time, it was literally like the gold rush ended and the doors were boarded up. Every day I was going to work, every week I was going to work, I was seeing fewer people on the road. And so that was really an extreme. And then venture funding and startup funding went away. I don't think that's going to happen in any way, shape, or form. And I think not nearly to that extent. We might see a slowdown. On the corporate side, I'll let David answer that. But as I mentioned earlier, the most important thing is find the right partner. Find the right partner, work with them, make sure you're ready and you are communicating well with them and making them comfortable.
Yeah, and I think just in venture in general, like I've been through a couple of slowdowns and witnessed that as well. I think the key thing to keep in mind is there is going to be a correction in valuations, right? So if you get a term sheet and it's radically lower, that's something you have to consider. And like has been mentioned by many of us here, if it's the right partner, it's probably the right money to take, right? Even though you may not get the exact valuation that you want, right? Because we're at a point in time where everything's going to start coming down. And by the way, it's in the venture firms, they say we're going to tighten things and slow down. Well, they want the valuations to go down as well, right? Because we've been in this market now where, I just remember like 4 or 5 years ago where I was thinking we're in a bubble, and it continues on and on and on, right? So it's now like, oh, finally, if you're running a VC firm, you're like, oh, I can actually get the old, percentage that I think is fair, right? Or it's just much different environment.
The joke is you always, in retrospect, see signs at the top. And back 20 years ago, I was in a park where somebody had a T-shirt on that said, literally, I kid you not, www.dogpoop.com. That's a sign that you've hit the top. Another story of somebody who will remain nameless, but a company that went out and raised 9 figures worth of money this year with financial statements that were 4 months in arrears. And so that gives you an idea of how the money was flowing at that time. And I think it's safe to say the terms are going to change.
Yeah,
There are stories like that all the time. I just know a company that just raised at the beginning of this year, and they had no product.
yeah. Well,
And
yeah.
they raised $150 million. And it's crazy.
Yeah. What we saw, Fast, for example, was an example right now that they didn't have the revenue, but has a huge team, huge capital raised, and then it went down. And you can say many things, but we did notice a lot of craziness right now in the valuations and the amount of capital raised for sure, which is really interesting. And actually, this bridges us a little bit to this other part. Like, we're all talking about recession, and we're talking about prices or whatnot. We're talking about layoffs and all that. And I want to touch on two sides. Angeles is an investor network, so many of us are thinking, okay, should I grab my money and just have it very close to me, or should I keep investing, right? So let's start with that. It's like, what do you recommend to angels right now? Should we be investing? Should we be just being very careful with our money? What do you read on the environment, and what do you recommend to the Angeles network?
Well, what I would say is, and I think it was mentioned earlier, that some of the greatest companies of all time began during quote unquote downtimes in the market. I worked at Fortune 500 companies that ignored and did defy what was happening in the marketplace on a macro level. Certainly a startup can do that. Absolutely. If you're a VC, or an angel, I'm assuming while you might be in the short term feeling a little bit of discomfort, you've got to like that valuations are coming down a little bit and things feel more realistic there. And I wouldn't hesitate, if I was a startup who is raising money, if you found the value that the right investor can bring to you would far exceed anything that would cause you to hesitate. But what I do think is that people are going to have to watch their money once they have it a little bit more. I've sat on board meetings where the board said, I don't care, I want growth. I want top line. And the thought was, well, if I burn through that money, there's more out there. So I think that's another consideration to take into account.
Yeah, I think that it's an interesting question. I was 15 years in the beer business, and people said, when the economy's good, people drink beer. When the economy's bad, people drink beer. Is it a good time? It never is a good time. It's always a good time to invest. It's never a good time to invest, or in terms of when the economy's up and the economy's down. The ideas will continue to be there. The entrepreneurs will be there. The pain points will be exacerbated for industry also, not just entrepreneurs out there. And so we are going to need innovation. And so I think that the more that you are active as an angel investor, you familiarize yourself with the space, you look for things that you feel genuinely meet a need, satisfy a need, you should be asking yourself many of the same questions. And then to the point of valuations, coming back down to earth and a refocus on fundamentals, I think that's where the greatest opportunity is actually for angel investors to become active now.
Yeah, I would agree with what everybody said. You just have to do more diligence, I think, and just be disciplined on what you're going to invest in. Right, because depending on where you get your capital from as well, you just have to be more disciplined about investing that as well. I know in the 2008 downturn, personally, we were investing, when I was at Steamboat, we were investing in and had agreed to invest with another venture firm to split the round and everything. And then suddenly it was not their fault. Their LPs said, they did the cap call and they said, we can't give you the money. And it blew up the whole deal, right? So you just have to be disciplined about everything.
Yeah. And then from the side of the entrepreneurs, there are two sides. One of them is the companies that are already running. Like, what would you recommend to companies, to startups that right now already have capital, they are in this turmoil? What is your advice to them?
People who are raising money and they're seeing this uncertain future, or at least the immediate future, I would just reiterate the idea of making sure that you are managing your cash flow and managing your cash burn very carefully. That doesn't mean you stop. It doesn't mean you stop spending money. It doesn't mean you stop investing in your company. But again, people got into the habit of burning money and spending money thinking, when I need to go back to the till, it will be there. And that may be true, it may not be, but make sure you're thinking through those issues when you're deciding on how you're investing. And remember, the key is when you go to ask for that money again, the question is, have I reduced risk for an investor, or have I opened or unlocked potential market or value that I hadn't previously, right? Nobody ever worried about a down round over the last few years. Right. If you are going to raise money, you don't want to set that precedent where you didn't have to worry about a down round almost no matter what happened previously. It's something that's coming into the specter of possibility now. So make sure you have as your calling card something that makes it difficult for them to say your business is not more valuable now than it was last time you raised money.
Yeah, I would just reiterate that because, like you said, people haven't experienced down rounds, and being on this other side of the table, it's not a good feeling as well if you're, being a venture investor and you're helping support that entrepreneur, and you just have to kind of be stuck in that situation where everything is forcing you to be in a down round. So it's not a good feeling on our side of the table too when we're investing in it. We're investors, right? Because nobody's happy. And it makes it very challenging. But at the same time, if you believe in your business, managing cash or just finding a way to get cash to keep your company going, I think and I don't recall the details off the top of my head, but it's the famous story about Amazon raising debt after the bust in 2000, and they really literally just were lucky that they timed it. Like if it was a week later, they wouldn't have been able to get that debt, so to keep the business going.
Yeah. And somebody mentioned in the previous panel, and you were mentioning, Mike, before that many of the best companies that we see right now, and that has been through the history, like not only in this tech era or the information technology era, but companies since 100 years have been founded, many of them in crisis, right? So that's something that we always need to be aware of. I was rereading Paul Graham's essay about those companies that are founded in crisis and everything. It's doing an analysis, and one of the things that I found interesting is that because there is a crisis, saving money, anything that saves money to people or makes money to people is going to be successful. So you have to think a little bit about that, right? Like, well, how is my company providing that type of value where I can save money to people or to companies? Like everybody is seeing it in the same place. Where like, okay, I need to save money. So anything that helps me being more efficient, save money, make money is definitely going to succeed. And probably we need to think, and like the startups need to think and shift their mindset into not only building product, but also how am I providing that value that is tangible. Yeah.
And understand as the macroeconomic environment shifts around you, you may need to pivot, right? You might have a solution to a problem that evolves. And the question is, before you go and do another raise, how are you going to address the the business environment that's changing around you?
Yeah, definitely like cutting some of those things that are more nice to have and focusing on the things that will make you grow. I mean, we've been discussing a lot and asking many questions, but I don't know if are there any questions from the audience right now or from the clouds? Yeah.
I'd just like to say
Yeah.
one more thing. So if we made everybody feel down because of this, it's really an exciting time to launch a business. It really is. I mean, with Web3, everything else, the tools you have at hand for developers, et cetera, there is no better time in some respects to do it. It's just the fact that, the high crazy rounds and valuations will not be there anymore, right? And the craziness of, because this isn't, since we've both been there for a while, over the last several years, the idea of like founders taking money off the table in each round, that every financing selling their own shares became a habit. And that was something that I never experienced when I first started in the venture world in 2001, right? You never heard of that. I mean, I recall even one time when one of our CEOs came into Steamboat and asked, and we were all aghast, like, what are you talking about? And then over the last several years, founders have been, taking money off the table in each round. So, that may kind of dwindle as well. But again, it's an exciting time to launch a business.
Yeah, I would just reiterate that. Yeah, I don't want people to think that this isn't a great time. I think the way to say it is the euphoria is probably over. That doesn't mean there isn't a lot of great opportunities for people. And as we were saying earlier, good ideas and good management teams don't go up and down with the business cycle. Yeah. And one of the other things to keep in mind is that I believe one of the reasons why some great companies come out of those recession periods is because when money's free flowing, you don't have to manage your company that well. And I'm sure the entrepreneurs who were here in the previous panel will say that the tighter things are, or the more closely you have to watch them, the more discipline is embedded in how you operate, the more creative and ingenious you have to be, and that sets you up very, very well when times are better and prices come down for services. I don't know about for commodities, but often they come down for services during a recession or during downtime.
And as far as we're seeing from our corporate clients, the appetite for collaboration with startups is even greater in an environment like this, because they are often being asked to do more with the same or less budget, or fewer resources, or fewer people. And the number one way that they can sort of leapfrog those gaps and close those gaps is by collaborating with the people who are at the periphery of industry, innovating to solve the specific challenge they're trying to overcome.
Totally. It goes back to that part, like right now, anything that makes you more efficient, save money, is definitely going to be successful. And I think what you're discussing is also in the lines of, at the end, it's about business fundamentals, right? Like you have to sell, you have to have users, you have to have some revenue, profits, and all that. So it's about building a business. I always found like the valuations I always found funny because it feels so subjective. And it's like some company may be worth a lot, but it's just the check that was given and not necessarily the value that the company has provided, right? So definitely an interesting situation. But again, we have a question?
Oh yeah, we have a couple questions online.
Awesome.
Then we'll come back to the room.
Yes, a question here from Eduardo Tobon. How is the panel feeling about crypto and blockchain? What will be the next Amazon-like plays in the sector? And if you had a wild guess.
Who wants to?
Well, I mean, I think I don't know if I have the answer to that, but I think what blockchain is enabling is things beyond just crypto. And I think that's what's important. And I think that's overlooked many times. You know, in Web3 now, you can actually, which like is what non-fungible tokens are all about, is you can show ownership of digital assets, right? Which could never be done before. And so there's opportunities there for companies to take advantage of that or use blockchain in new ways, right? That perhaps we haven't even thought of.
And we earlier this year, we sat down with the head of the Blockchain Association. And I think one of the other things, just to echo what David is saying, is think about the impact that crypto is having on the perimeter and blockchain in terms of the regulatory environment as well. So there's going to be a lot of evolution very, very quickly, whereas regulators in the past, I think particularly driven by big tech, but also held back by big tech, have not necessarily addressed the transformation of media because of crypto and because crypto is expanding into traditional financial markets and offering things like mortgages and other, to the point about neobanks, regulators have to protect consumers. They have to step in, and they're going to have to accelerate their understanding of the space and the impact that the digital transformation is having on the space. And I think that is also going to open up a lot of new opportunities, not just for innovators, but for traditional players in these industries that are being impacted by Web3 and crypto and blockchain.
Yeah, I would just add, I agree with what people are saying. I don't know whether it will be the next Amazon, but I believe that some company will look back 20 years from now and say a financial services-based company grew out of blockchain. Again, I think that crypto is the Trojan horse, and blockchain is the delivery mechanism for what we're going to see. To David's point about ownership and being able to verify that people own assets on the blockchain, that really can remove the whole need for a middleman for financial transactions. So you all might remember a year ago, Jamie Dimon and all these other bankers were scoffing at the idea of blockchain, including my old employer, PayPal. And then like this, Andreessen raised a 9-figure fund for blockchain. Money started flowing in, and they totally switched. Yeah. They turned on a dime. And I would also say for the Latin community, I think that one of the real success stories and why there's a lot of money going into Latin America and into South American businesses is because of the success of Nubank, which is a challenger bank. But I would say there's been 2 major companies that have come out that have shown the venture capitalists, if you put money in, you can get it out. And it's Nubank and Mercado Libre, which was an investment of one of the other companies I used to work for, eBay. So I've watched others make money in Latin America a few times. So I think that the moment is great to kind of reiterate that for the Latin community. If you're focused on the Latin community and you have some great role models for entrepreneurs who've built great businesses.
Yeah. I would like to add there that I see, well, there is the crypto side of things, and even like on the Web3, on the NFTs, a lot of the speculation is probably gonna die for a while with the Luna. Like if you follow, again, crypto right now, like there is a cryptocurrency that just went down, a stable coin that wasn't stable. So that went down. But actually, I think that's going to be better for Bitcoin, Ethereum, like the well-established blockchains, Polygon. I assume that is going to happen as well. USDC as a stable coin. So there is that part of things. The other part on the Web3 in general, I think, for example, with NFTs, any project that provides value and utility, because I think we on the NFT space, there's been a lot like, I launched what's called a PFP, like a photo of something, a monkey or something like that. But then there wasn't utility behind it. And what I'm seeing right now, it's more projects that try to bring that utility. For example, I don't know, like there is something that is called a DAO, but an organization of multiple people in the film industry creating an ecosystem where you can fund companies, that the rights of those companies are owned by the DAO. I definitely imagine something like the new Netflix, how a new Netflix will come from a blockchain kind of a world, or a new Disney or something like that. But it's basically, I see that part of utility for sure happening in the space. So I think it's, again, like with everything, a lot of the speculation side of things is going to die, and I think that's healthy. But there's going to be that other side, that more projects that are bringing utility, creating value, they're really solving a problem, that I think are gonna flourish. Yeah. And we had other questions, right?
Any questions? Yes, we have one here.
Yeah.
Thank you. Hi, my name is Ruben Ocampo. I'm one of the founding members of Angeles. Thank you. As a Latino myself, one of the main reasons why I became excited when I learned about Angeles and joined Angeles is because of the challenges that Latino founders have in securing funds, especially in the early stages. So I love what I just heard about money going into Latin America and South America and the success stories. And yet I believe that it's still a challenge, right? Like still about 2% of startups in the US are Latino or Latinx founders. So I'm curious to know, what light can you shine, and what else can we do to kind of like lift Latinx founders and make sure that their startups have, a chance that is at par with other startups.
So there are two things that I would just say in response. It's a great question. And actually, we talked a little bit in our prep for today about the opportunity and the role of enabling greater diversity in the space and in the innovation in general, just simply A, because it's important to do, but B, because it'll lead to better ideas, and it'll lead to better business, and it'll lead to better growth for everybody. The first thing that we're seeing a lot of is actually because of data technology, all of these enablers, these digital transformation enablers in the environment, democratization of access to capital in non-traditional formats. So there's two companies, Solo Funds, Honeycomb Credit. We actually worked with Comcast on a project where we went out to look for financial impact startups. And these are startups that are giving small businesses access to capital in non-traditional ways, either because their customers are funding them or their communities are funding them. They're replacing things like predatory loans. They're just giving them alternative sources. And I think it was really interesting to hear Real talking about that as well on the previous panel. I think you're going to see more of that coming in the fintech space, again, because the technology is there to transform and provide underrepresented communities with access to capital in new and non-traditional ways that mean you don't need the network of being, a 10-time founder or being, 20 Ivy League degrees or whatever. And I'm not saying those are bad things, but I'm just saying that they're going to give more people access to more different networks that are going to give them access to capital. The other thing that we're seeing is actually coming from our corporate clients saying, we actually want to work with more diverse founder groups. And so purposefully setting up programs to provide access to corporate networks and CVCs, and that as a vehicle for investment to help provide Latino founders with the same opportunities, and more funding to help them scale in the marketplace.
Yeah, I would just add, I understand the challenge and the frustration. What I would say is, I think what Guillermo presented earlier was so important to say. This is these ecosystems exist in very few places in the world. The good news is one of them is right here. And so building that, seeding that is so important. And Angeles is super important for that reason as well. So I think that will help the team of people who are looking to be represented and to follow their dreams. I would say the other part of it is while that's going on in the medium and long term, I think that the important thing is to make sure that whether you're going to Angeles or you're going to our firm or Vanessa's firm, what have you, make sure that you give yourself every advantage. Make sure that you put your most professional foot forward, and make sure you're taken seriously. And I think those are really the three things I would highlight.
Yeah, and adding to there is Angeles, there is Chingona Ventures that just raised 50 million for their fund. There is Vamos Venture, Latin VC. So I think there is already. So it's really interesting because when we see the stats, we're always like, okay, yeah, we're falling short. But I think the society has changed, and it's us also that need to say, okay, well, let's just get the suit on, get the act together, the pitch together, and then just go out. I think the world is ready, and we need to just grab it. And I think that's super important. That's why it's something like Conectados, for example, that is trying to basically close that gap. It's super important in the sense that I honestly think the world is ready. It's just that us as a network, as Latinos, we need to just get together and start to connect each other, recommend each other, do business with each other, which I think is super important. And the do business with each other is something that Elban, a strong network on the Latino business entrepreneurs out of Stanford, we're always preaching about that. Basically, it's like, let's do business with each other, get business for each other. I mean, we are almost on time, so I think this has been a great panel, but I would love to have some final words from each of you. Maybe we start from Vanessa. Yeah.
I think that it is a great time to be a founder. It is a great time to be an angel investor. And I think that there are a lot of opportunities in moments of uncertainty and as we say, not to necessarily disrupt or be disrupted, but to collaborate and to find new solutions to problems that exist in society. So we're excited to see the pitches later today and very happy to be a part of today's event. And thank you for having us.
Yeah, I would just add briefly that I think I want to reiterate what Vanessa said. There is nothing that can stop, no matter what the situation, an entrepreneur with a great idea and a good team. And not that anybody up here should try to tell you to wait or stop or slow down your dream. Go for it. And there is an ecosystem to help you.
And I would just say, just like I said before, I mean, there is no better time in market right now. There's just, this is just background noise. If you're an entrepreneur and you believe in what you're doing, you're going to go do that whether the market's going down or up, right? That should just be noise in the background, right? And if you're an angel investor, if you believe in that entrepreneur and you believe in the market opportunity and business and do all the diligence that makes sense, you should be investing, right?
Yeah, and I'll steal this also for Graham and paraphrasing, but he was basically saying, like, if you're really passionate about something, if you really believe in something, if you really think you can solve a problem, the moment to start that is always now. So I think this is the time to start. From crisis is actually where some of the best companies come, as we have discussed. There is a network that can support you. Latinos are growing strong. There are funds that are being available. There are networks like Angeles, Elban, Chingona as a VC firm. So let's just do it. The moment to start is now. So thank you, everyone. I think thank you for this wonderful panel. Thank you for the audience. Looking forward for the pitch.